Narayan sir to occupy the dais. I request all to please rise for the CA motto song.
यशस्सुप्तेषु जाग्रति यशस्सुप्तेषु जाग्रति कामं 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 कामुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदुनात्यपि कश्चन एतद्वैता
Please be seated. UFA video will be played. Those who are interested to register for UFA, there is a POS in the front desk. You can register for that.
Arthashastram, Dharmashastram cha, meaning economic principles, Arth, and ethical considerations, Dharma, which are central to the work of accountants. The entire world is deliberating about impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the world, where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOBAC, proudly presents before the world World Forum of Accountants 2025. Where accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession. Where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhoomi, the largest convention and exhibition center in the heart of India's capital, New Delhi, inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days, insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025 at the magnificent Yashobhoomi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhoomi, New Delhi. For more details, visit wofa.icai.org.
It's my pleasure to introduce CA A K Narayan sir, is Managing Partner of Scriptbox India Private Limited, and is an investment coach and trainer for investor education. He is a speaker for financial literacy program and capital market seminar in various schools, colleges and other forums. He has over 2 decades of industry experience in corporate finance and top management. He is held CEO of large leather group in Chennai. He has been a past president of Tamil Nadu Investor Association for 15 years and a past president of IFA Galaxy, a group of financial advisor for 3 years, over 3 decades of experience in capital market. He has been an author for the book How to Invest Right and Prosper. He served as a trustee and member in Investor Protection Fund, served as a member Committee of Investor Education and Protection Fund, Government of India, Ministry of Law and Justice and Department of Company Affairs for 2 years, served as a member SEBI Investor Protection Fund. Over a decade served as a trustee Investor Protection Fund, National Stock Exchange Mumbai. He served as a trustee Investor Protection Fund, Madras Stock Exchange. Also served in many committees constituted by SEBI. It's our pleasure to have an answer for today's topic. I request Chandrasekhar sir to present memo and to our speaker.
Good evening. Thank you for your lovely introduction, and thanks for coming for this investor awareness program conducted by SIRC this evening. Investment is always a challenge, and today is not going to be any different in 2025. Everybody wants to invest money very safely, get maximum returns possible wherever they invest money. Some are successful, some are not successful, some are lucky, and many are not lucky. This is going on for many years, and today is not a different day. From my own experience and based on what is happening in the market, I can tell you what is the prevailing situation in the capital market and how best one can look at investing in a serious way. I always feel that earning, saving and investing has to come in the same order rather than looking at various other options of investing money in the market. There are a lot of questions about whether we can borrow money and invest money, whether we can leverage on our investments and still invest money. These are the simple general questions come to us on a regular basis. That's the reason why I'm saying earning and saving has to follow investing. Then the question comes, where to invest our money? I always say that nobody can become rich overnight, but if you're going to be consistent with your efforts, if you're going to be truthful to your investing journey, definitely you can become very rich. But the key here is waiting period and your long-term perspective of the whole thing. If you are in a hurry and if you think that you can become rich overnight, it is not going to happen. So I'm just going to take you through some of the few things which I felt was important for us. Of course, you all are very knowledgeable people here in the CA Institute, members of the profession and the student community. You are all well versed in this field. However, I thought I will take you through some of the things like other allocation, emergency fund and the difference in insurance and investing, and of course little bit of risk mitigation and common mistakes made by investors at regular intervals. And I will take you through to the mutual funds and then say how one can become really wealthy. First and foremost, we must understand that investment has to go into the regulated scheme and not to an unregulated scheme. I find people still going for unregulated scheme and losing money at regular intervals. Today also I saw some news item in Bombay where people have lost money. People want to get extraordinary returns. That is the greed with which people invest money. You can never do that. If State Bank of India gives me 7%, maybe 8 or 9% is reasonable. If somebody wants 20%, I think it's not going to happen that easily. If somebody is offering 20%, that means he's going to cheat you. If not today, it is going to be a matter of time. But we don't understand that at all. We think that he will help you. Nobody will help others in money matters. Let us be very, very clear. Even your own family members won't help you. I'm putting it across very clearly to you. Money is yours and you need to be very careful with your money. I find many people come to us and say, I thought he will honor his commitment. Nobody will honor the commitment. When it comes to money, money has got a different perspective altogether. So you need to be careful about handling the money. You can be a qualified person, you can be a great professional, successful businessman, but if you don't know how to handle money carefully, then the whole game is gone for a toss. That is what is happening in India right now. Many people come to us and say, we do trading, we do indulge in so many futures and options segment, but then ultimately at the end of the day, you must have seen many assessees and many clients of yours losing money at the end of the year. Why it is happening? That's a question one has to probe into it and then take it through. This kind of awareness program help you. Help definitely. I'm glad you have chosen to come on an evening and spending your valuable time this evening. You need to be aware of the pitfalls and then make an investment. So that's why I always say regulated schemes are very good. People love to put money in a Ponzi scheme and lose money. People are waiting to grab your money and lose. So please be very careful about the cryptocurrencies which are in extensive widespread circulation in India. There are over 12 to 13 crores of people investing in crypto. It's not regulated by anybody. Crypto folios are higher than mutual funds. But then people love to put money because they think they can make money. Maybe they are getting money, I don't know. But it is not a regulated product. In case some problem crops up in crypto, what you can do is go to the nearest police station and make a complaint. That's all. You can't do anything else. You may get money, you may not get the money back. So be careful about unregulated schemes. And if you are not careful enough to hold your money, then you have to blame yourself and nobody else to be blamed. Across the globe, nowhere crypto is regulated till now. That's why I'm giving you a caution on this. It's not that only in India this is happening. Across the globe, nowhere it is regulated. So we have to be extraordinarily careful about it. So how do I make my investments? We have to have these three parameters on safety of my capital, liquidity whenever I want my money, and then of course my returns. These are the three parameters with which I make my investment. No wonder people go to post office deposits or bank deposits because it gives you a safety of your principal. You have a desired or predictable returns, and of course liquidity is also abandoned in that. But is it going to solve my problem? I don't know, but people are very happy with the deposits being made. It holds good for a deposit of corporate deposits. In case you choose the corporates correctly, you are lucky, money is safe and it's liquid. But the issue comes here, when you don't have the liquidity, when you're depositing the money in a piece of land, then the problem starts. A lot of people buy land. A lot of people come to me and say, I bought a land 20 years ago, 10 years ago, 5 years ago, far away from Chennai, thinking that one day or other it will give me great value. maybe 10 years down the line, it will give me 2 times, 3 times. I buy it 50 kilometers away from Chennai, 100 kilometers away from Chennai. I think that one day it will go up. But what is the liquidity aspect of that? Zero it is. You can never sell your land or building that easily. We are experiencing that now. But if you are lucky, yes, you will be able to get a good buyer. We are not saying this is good or bad, but certainly liquidity has to be kept in mind. This is a very simple thing for youngsters. I always say that saving and investments are 2 different aspects altogether, because we think that money kept in a savings bank account is an investment, which is not the case, because it gives me about 2% or 2.5% return. But every one of us are keeping 2 lakhs, 5 lakhs in savings bank account, thinking that it is giving me interest, and it is always giving me the desired satisfaction that money is safe. But we have, really speaking, we can always move the money, keeping very bare minimum in savings account and move into some kind of an investment. Even a liquid fund in a mutual fund can give you double of that, 5% or 6%. So just think a little bit why we are keeping more money in a SB account. Why not we move into a liquid fund? 24 hours liquidity is available. You can take back. Taxation is same. So why not take advantage of that? So we have to have some kind of a change of mindset to move money and take a little bit of effort to get little bit of extra return. 5 lakhs, 10 lakhs keeping in SB account has no meaning. So one has to take control of that. And effort is required to move money from SB to investments, whether it is to buy a gold or buy a land or buy a mutual fund or a stock or real estate. It holds good for everything. So typically there is a difference between SB account and an investment account, and some efforts are required to move from place to place. I'm sure you're all seen this, but liquid definitely is a much better option. After COVID, this emergency fund has become all the more important. During COVID, we have seen people running helter-skelter for money. Keep at least 4-5 months of your expenses in a liquid money or bank deposits, so that anytime you can break it. Don't bother about returns. The idea here is not the return, but the capital preservation and return of capital, and whenever money is required, I can pull it back. So keep at least 4-5 months expenses. Suppose my expenses are 50,000 rupees a month, keep at least 2.5 to 3 lakhs of rupees in a liquid fund. It will help you a lot. There, the return is not important, but return of capital is important. So 5% return, 4% return is good enough for me, so that I live in peace. Loss of job, or change of job, or medical emergency, whatever it can be. So emergency fund is the first and foremost step in a financial planning which you need to take care, and your children has to be taught this first lesson. If you are not having emergency fund, then the first step itself is going wrong completely. This is the first step in your financial planning. A lot of things can be said about insurance. Today everybody has got insurance products in their hand. But do they have relevant insurance? Do they have adequate insurance? If I ask a question one by one, the answer is no. They have all kinds of insurance excepting what is required. Because there are abundant selling of insurance product taking place in India. I think it holds good across the globe. But what is required for us, we have to only understand that. Anybody above 18 years of age and having a decent job, all we require to cover our life is a term insurance product. But we have other products having insurance cover also. Everybody pays 3 lakhs, 5 lakhs, 10 lakhs premium per year to have a cover of 2 lakhs or 3 lakhs or 5 lakhs. On the other hand, a small young boy or a girl of 18 years or 20 years or 25 years to cover 50 lakhs coverage, all you need to pay is about 5,000 or 8,000 rupees per year. They are paying 5 lakhs a year. Really surprised why we are taking that extreme step. The second part of the financial planning is to have adequate insurance. Take care of your insurance products very well. Make people understand at home that this is very simple practice, but we need to know what to buy. I am a seller, I can sell any product to you, but you should know what product to buy, at what cost to buy. You can go to supermarket and keep buying whatever they have. It's like that, insurance products. But buy only a term insurance cover and get rid of all other insurance things which you have purchased. Very difficult to do that, but this is what is happening today across India. People think buying insurance is a great idea to have a saving and wealth creation. Absolutely not a correct idea. If you want protection, go for insurance. If you want wealth creation, go to mutual fund. These two steps are absolutely parallel, and we have to understand this, the right perspective. Nobody will sell term insurance because it doesn't give them any return to the seller. So please be careful. You have to buy it yourself. So that is one. And then, of course, health insurance is a must. It's not non-negotiable, all this. You have to have a health cover. Don't think it's a waste of money. You have seen COVID. Many more things will happen. So one has to be protecting ourselves in the best possible way. The inflation is a killer. Everywhere we have seen about inflation. Inflation is going up, coming down. We can say a lot of things about inflation, but we are in a country where inflation is under control to a large extent, I would think. I can't say it is absolutely controlled, but to a very large extent, it is under control. 5-6%. RBI wants to bring it down to 4.5%. Government aims to bring it down to 4%. All these things are happening. But 5%, 5.5%, month-to-month inflation data, all kinds of things are happening. So please understand that inflation is going to eat away. If I'm going to get 7% interest from State Bank of India, and if my inflation is 6%, imagine your real return is 1%. On that you pay tax also, whether it is 10% or 20% or 30%, then you get back what? Minus. But then we have a satisfaction, my capital is protected. So people live like that. I'm not saying deposit is bad, but understand what is required for the next 1 year, 2 years or 3 years. Put the money in a bank deposit. The money that is not required beyond 3 years, deploy it somewhere else which can beat the inflation. That's all I'm saying. So you need to have 2-3 buckets in your cash flow. The first bucket is 0 to 3 years. Put the money in a bank deposits. Absolutely safe, predictable return. Everything is fine. Because you need the money anytime. Keep it there. But 3 to 5 years, 5 years and above, you have to take control of that and put it in a way that it beats the inflation. So we need to do little more work. It's not easy handling money. That's what I'm trying to say. The handling of money is always difficult. And we need to have somebody's help to take care of the money matters. People may think it is easy. By reading a newspaper, we can put the money here, there, and all that. It's possible. But people are scattered across, having 50-60 stocks and 40-50 folios of mutual funds, and buying land here and there, and keeping gold in the lockers here and there. It's not the proper financial planning, or is not a proper way of handling the money. So we need to devote a lot of time, and we need to pay attention to minor points so that we get little better return than what is normally available to us. These kind of awareness program help you to make you understand a little bit about the various asset classes that are available and how each asset class performs. Across the globe, there are only 4 asset classes, whatever you say, that I'll come to it separately. This is the 4 asset classes that are available for you. You cannot invest in the 5th asset class anywhere you go. Only 4 ways you can invest money, whether it is equity or fixed income, real estate or gold. Nothing else is possible. So you need to have a pie everywhere. Fixed income is known to everybody. Putting money in a bank deposits, putting money in a corporate deposits, putting money in PPF, corporate, wherever you want to put money, which earns a fixed income. It's called fixed income at all. Even in debt, fixed income is good. So all these things are good for you, fixed income. Some portion has to go there. Of course, real estate, I need not say much because everybody aspires to have a house, first house, second house, third house, fourth land, this, that. Everybody loves to buy, keep on buying land. But is it giving me the desired return? I don't know really how many are able to calculate that. It's good to have one good house to live. That's more than enough in my opinion, but people have different opinion. It doesn't matter about it. People can be, but you can't be very, very adamant to keep on buying real estate. That's where the mistake happens. Because the rental yield from real estate is not that high. I buy a property in OMR Road for 1 crore and I give it for rent, say for 25,000 or 30,000 rupees. I get 3,60,000 a year. It gives me an yield of 3.6%. And this yield, not only in OMR Road, across India is same, 3.6 to 3.8%. And somebody will come and tell me commercial is better, that is better, this is better. That's all fine. For argument's sake, we can always argue. But how many of us are ready and equipped to buy commercial real estate and manage it? So difficult to manage today. Then somebody will say that you sell it and you get a better money. Yes, you get it. If you find a good buyer and good price, yes, you will be able to make more money. But one good house is a must, in my opinion. But second house is a luxury, and third, fourth house and land may not be required at all unless you are a super HNI. For a normal person, it is not required. Gold, we talk less because everybody loves to buy gold. All T-Nagar shops are full because people keep buying gold. One of the reasons why our currency against dollar is 85, 86 rupees is because we are importing gold and keep on buying gold, and we will never be able to see any kind of appreciation in our rupee to dollar. One of the largest imports is gold. 800 tons of gold we buy every year. And we are one of the maximum holders of gold in the world. Wherever we find bank, wherever we have lockers, we have people putting that in the locker, not knowing how much you are keeping. If I ask them how much gold you are having, people may not be able to tell an answer for that because they keep buying and putting it in the locker most of the time. Is gold good? Yes, gold is an excellent commodity, excellent asset class, and it can also deliver a decent return, say 8%, 8.5% return. Last year was a unique year where it has given a tremendous return. But every year will not be same. But average of 30 years, if I ask me, maybe about 9% return would have got from gold. Definitely beats inflation. So inflation beating assets, gold will be there definitely. But fixed income cannot beat inflation because it eats away. Coming to the equity market, today's discussion. 5 to 6% of the people invest money in the equity market. The question is, they always ask me a question whether market will fall, whether the market will crash, whether the FI selling will have an impact in the market. All kinds of questions they'll ask. Except putting money in the market, they'll ask all kinds of questions. Market has delivered, but for me it has not delivered. This is what people say. Equity as an asset class is a must. So these 4 as a allocation, if you are properly do And I think you have done a good job. But without equity, if you're going to cover only the 3 asset classes, that means you're taking a risk. You're having major risk by not investing in equity and not by investing in equity. I'll put it that way. So fixed income can give me about 7%, gold can give me about 8.5%, real estate can give me about 8 or 9%, and equity is delivering 15%. But what we do when the market goes up, we sell equity and buy gold. Because we sell 15% return asset and then convert it into 8% gold. Because we believe gold is a great asset class. No harm in that. But overall, in my opinion, gold should form part of 10% of your portfolio, nothing more. But forget the consumption part, whatever you are wearing, I am not counting at all. That is your decision to wear. But as an investment, if you're going to ask me a question, how much gold I should preserve? 10% of your overall portfolio, that is good enough. If you have 10 lakhs of rupees, put 1 lakh of rupees in a gold. Whether it is a physical gold or paper gold or whatever gold you want. It's a very good methodology, don't more than that. Real estate, yes, it's good, but one good house is good enough for you to live comfortably. Otherwise, today what I'm seeing, 35-year-old boy or a girl joining a job, then finally entering into an EMI for their lifetime. Nothing wrong in buying a house at 30 years, but lifelong they have to pay the EMI, 30 years to 60 years. Then they sacrifice many other things. Not a bad idea to borrow money and buy a house, but at what age you should buy, where to buy, when to buy, all these questions always needs to be answered. You can't just join a company and then start taking a loan. It's a very dangerous thing to do. So, equity as an asset class is a great product. Either direct equity or equity mutual fund is a must for each one of us today. 5-6% of the people are investing right now, and definitely they are having a decent return of 13% or 14% the last 25 years or 30 years. The time frame is absolutely a must. If you are not getting it, it means you have not invested for a particular longer duration. Any money not required beyond 5 years can go to equity. Money which is required in the next 3 years or 4 years, that can go into fixed income. These are all absolutely non-negotiable principles which you have to follow if you want to be successful. This I was just going through some of the interest rates which was there in India. 1989 when I went to Sundaram Finance, the rate of return was 16%, and 1999 it became 13%, and 2009 it became 10%, and now 2019 it has become 7%, and 2029 what will be the rate of interest depends on the inflation and the RBI policy. You may not get more than 4-5%. And if you are going to get 4-5%, are you equipping yourself? Are you ready to face that situation, or you will blame the government for bringing it to 4%? That's a question. That's the reason why we are having awareness program of this type today. We have to find an alternate product which can deliver higher rate of return for me to sustain, for me to take things forward. So 4% or 4.5% is going to happen. Now whether you like it or don't like it, but it's going to happen. A lot of questions come about, sir, how you can tell me 4% and all that. I don't know myself, but I have a feeling that the record and the data shows that there is a likely chance of 4%.
Each 10 years, 3% is getting better.
This is what the data shows. Now, 2029, don't be surprised and say that it has become 4%, the government is responsible. Government is no way responsible from, always they give you data. So, it has to be there. So, what kind of preparation are we making to meet this kind of situation in 2029? That is the way we are conducting this awareness program. You are preparing yourself for this 2029 by investing in a product which can deliver at least 10% or 11%. By investing in gold, can I get this? By buying a real estate, can I make it? By putting in State Bank of India for 10 years, can I make it? All these things are the questions one has to go in your mind today. That's why I'm putting this. A lot of questions come about by reading the newspapers, seeing the news items in the TV. Sir, this India is not going the right direction, it is not ruled correctly, this, that. See, all these questions can be raised by many people. But are we deploying our money properly? Are we taking advantage of the situation, what is happening today? That's a question you should ask instead of saying that others are not doing their job. India is going to be a great country having manufacturing base, infrastructure. You are seeing in front of the institute, you are seeing metro train is being, rails being laid. I'm sure in 3-4 years time you can come in metro and get down in SIRC. This is not only in Chennai, across India, many places infrastructure development is happening. The next 10 years, what we missed out in the last 25 years, now we are doing it in a hurry. So the next 25 years is going to be a great period for India. Are we putting our money in the right product? Are we putting the money in a product which can deliver superior return than bank deposit? This is the question one has to raise. We may not like many things, but are we in the right path? We are living in the country where things are going in our own way. We should be lucky that we are living in India today and things are doing well. So why not take advantage by deploying our savings, some of our savings, in a product that can deliver little higher return? That's the simple question I am asking. Whether it is manufacturing, infrastructure, bank or consumption. Our banks are doing well. You are all auditors. You are seeing the NPA situation improving day by day. Those days are gone when people can just borrow money and abscond. It's not possible that easily today. So we need to think about it, how things are improving, and are we taking the right step by choosing the right product? Why foreigners are entering India in a big way? Most of the good manufacturing companies are having base in India. Why? Because they think that India will outshine many other countries in the world. We are the largest economy in the world today. And it's a matter of time, maybe 4-5 years time, when that inflation comes to 4%, definitely we'll be ranked number 3 after USA and China. Of course, China is far ahead of us, but still, after USA and China, we'll be number 3. You believe it or not, it's going to happen in 2029 or 2030. So when that is the situation, are we equipping ourselves by deploying our money correctly and safely and a product which can deliver higher return? That is what you should ask now, the question. How consumption, you must be seeing yourself. How the consumption has changed completely from last 25 years now, from compared to 25 years back and now. How people are spending money, how they are dressing up, how they are traveling, how they are going, how offices are. Everything is reflected in the consumption. And do you think it's going to be same? It is going to improve dramatically, and we are at least equal or better than many other countries. So no wonder we are heading towards third largest economy in the world, and everybody will come to India. iPhones are manufactured in India. Samsung phone is manufactured in India. We are seeing automobiles. You name the product, it is there in India right now. We may be lagging a little bit here and there, but the quality is so good, we are able to export. Maruti, when it came in the year 1989-90, they thought, they were skeptical. This is a company we cannot do at all well. 2002, when they came with their public issue at 125 rupees, there were no takers for Maruti. They thought the company will fold up. Today at 12,000 rupees, Maruti is the most sought out share. So we are missing out something dramatically. A good governance company, a company managed well, the company which has got a good profits, where the revenue is going up, automatically you will see company share prices keep going up. We are all auditing the companies, audits, corporates, you know better than me. So the idea here is to tell you that the market will reward a company which is well managed. That's why we are saying good groups. In Chennai itself, we can pull out at least 4 or 5 big groups, well managed groups growing rapidly. Not all will fall in the same line. Some of them may not be a great company, not managed well. Yes, if the company is not managed well, I am not going to look at it far more seriously. I will not look at a company which has got a poor corporate governance structure. Infosys, when they came in the year 1995, there are no takers. They thought this Infosys highly priced at 95 rupees. The share was not taken at all. Nobody knew Narayan Murthy and company. Ultimately, somebody went in and saved the IPO and prices started at 85 rupees. All those who invested 9,500 rupees today are sitting with 4-5 crores of rupees of the share, 100 shares. 100 share of Infosys is equivalent to 5 crores plus regular dividends on a yearly basis. We have missed it. But corporate governance of Infosys, even today we speak, because the company has delivered. There's no need to worry about IT slowdown, a recession in USA, nothing to worry. They have gone all these phases the last 30 years, 35 years. Do you think they should worry about it? They have come across various things happening. If a company has seen many cycles, I don't think we should unduly worry about. The standard set by Infosys is so high, even today we talk about it. That's the type of companies one has to look at while investing in the shares. A lot of questions come about why the promoters are selling. Yes, promoters used to have 50%, 55% holding in Indian companies, but today it has come down to 40%. One of the reasons why we are seeing market coming down is because promoters are also selling their share, whatever may be the company. A day will come when promoters will not be there at all because it will come down. If you go to Europe, there are no companies like promoter holding and all that, like Infosys. Again, promoters are holding 3%, 4%, 2%. No promoter concept. All are professionally managed. So same thing will happen in India also down the line. Maybe 25 years, 30 years down the line. Same thing will happen. So no need to worry about. Good promoters will sell some shares. Government of India is also trying little bit here and there. Mutual funds are holding, insurance companies are holding. Of course, retail investors are holding 9.5%. And foreigners are holding 17%. These FI, foreign institutional investors, they used to hold 24% of Indian market 5 years ago. They started selling in Indian market, now they are holding 17.5% or 17.9%. What does it indicate? We are not depending on FIs anymore. FIs are relevant, but they are not dependent on their money. If they bring in $8 billion or $9 billion in a year, it was a big thing for India 10 years ago, 15 years ago. But today, continuously they are selling. Anyway, today they must have sold 2,000 crores. Every day they sell 2,000, 3,000 crores worth of shares and then they go. Whole of last year they have sold nearly 1 lakh crore worth of shares they have sold. Because their requirement back home or maybe they are investing elsewhere. They don't care much. They'll just sell it somewhere here and there. Chinese market is very cheap, they say. They may go there also a little bit here and there. There's no problem about going to Chinese market. But people are reluctant to go there because of the transparency and disclosures and all that are not up to the mark like India. So they may not go there that easily. But definitely we have to watch FI figures on a regular basis. Let us not take them for granted. If they start selling in a big way, yes, market will correct. This is what happened when Sensex was 85,000 and they start selling in October, market came down because we will not be able to match them because the pace of their selling is so huge sometimes. But nevertheless, they may come back in March or April, we don't know. If they come back again $5 billion or $10 billion, they're going to invest in a month, again market will go to 85 or 90. When they'll come, when they'll go, we don't know. But we have to mind our business and we should know when to keep our money safe. We can't be going by whatever they say. Airbus is a company which manufactures aeroplanes and they are located in France. And they have a lot of tie-ups. India is going to be a country where aeroplanes are going to be made, or at least the parts major parts are made in India. So all these things, why I am bringing it to your attention is, so many companies are now entering into partnership with such a good ventures. So obviously you will find these kind of things help companies to grow from place to place. The demand for aeroplane is so huge today. There is a big backlog for Air India. There is a big backlog for Akasa and also for Indigo. We are not getting planes made by them. It is not like making a cycle and giving it to you on a daily basis. It takes time. 400 planes they have ordered, each of them, but delivery takes 4 years, 5 years, 3 years. So they are now finding it easier to come to India and manufacture some parts at least, so that these parts can be easily made and supplied. So our bigger companies, whether it is Mahindra or HCL, all these Larsen and Toubro, all these take advantage of all this. So understand that we are having a really good time now. Of course, this is a job supported by US exports to China. Now USA may say that we don't like China, but most of their supplies are coming from China. They cannot ignore China. We can say a lot of things about China, but China is so huge. Their supply system is so huge. America depends on China to a very, very large extent. It's not going to be easy to say that I don't care about China. It's difficult. China is at least 20 years ahead of us. Let us remember that. China is at least 20 years ahead of India right now. And another 20 years we catch up, they will grow much faster and much bigger. They are very big. There is no question about it. Their supply of raw material, API material to our manufacturing, pharma companies is so huge. You can't just ignore it and say we don't care a bit about China. It's not possible. We may not like personally, but we are dependent on China to a very large extent, and it holds good for your USA as well. NSE, National Stock Exchange, if I look at the listing, 268 IPOs have come to market this year. 268 IPO. That means the new promoters have come, small scale industries or whatever you call it, private entrepreneurs have put in money. They want to deploy their money and raise IPOs in a big way. So it's a big thing. So 268 is a big record, and some of you must have participated in the IPOs and it must have delivered great returns. No harm in putting money. This is the latest today's news, because people love to buy gold and investors gather outside Taurus jewelry. Why we should put money and then go behind a jewelry shop? I don't understand. This is the latest one. Today I got this. We are greedy people, Whoever offers some money, we go and give it. This has happened not in a small village. It is happening in a financial capital of India. Why? Because we are greedy, we want more returns, we believe others quickly. Understand one thing, the money goes out of your pocket, it's gone forever. It will never come back. Why should somebody give back that money? That kind of a principle you must have. Never believe anybody. Then they will say scam, go to police station, this, that, apply to government. Then they will say RBI is not effective, SEBI is not effective. Why all this? Why do you get into this system itself first? Understand that. Fool and his money is easily parted. Understand that. So let us not be ignorant about it. This kind of awareness program is meant for educating the people, creating an awareness, and also for investor protection. All the three are important for you. This is very simple, just a revision of whatever you know, but definitely we need to spend a lot of time on these kind of things. We can't allow our money to be squandered away by somebody. The Ponzi schemes, this is also one of the Ponzi schemes which is happening rapidly. When I was looking at the different types of investors, I found that some are preservers. That means they want to protect their capital all the time, put the money in a State Bank of India or put the money in a PPF or post office. Their job is to only preserve the capital. They don't care about return. 6%, 7%, they are very happy. No harm in that at all. 7% return consistently they get, they are very, very happy about it. They don't care about inflation, doesn't matter about it. There are some followers, they just follow the herd mentality type, they just follow somebody, neighbors, office goers. Then they put money, my neighbor has put money, I will also put some money. They don't ask any questions at all. The third person is an independent who invests in securities and assets on their own. Small quantity, buy 1 share of Godrej Consumer, 2 shares of Hindustan Lever, something like that. They think they are making money out of that. Then the final man is a wealth accumulator who is interested in building wealth for a longer duration. Very few people are taking the step of the last one. You should be in the wealth accumulator scheme all the time. You will not have any problem at 60 years, I can tell you that much, if you're going to be consistently, if you're going to save money and invest money. I'm seeing a lot of people now after the retirement find it extremely difficult to live because they don't have the adequate money, they may have some houses, they don't have liquidity at all. If you ask them, you want to buy a car, they don't have money, they cannot borrow money, they cannot do anything. It's a very sorry state of affairs. And you expect the government to help you for the pension and other things, it's difficult. So you have to create your own pension by investing money in a sensible way, in a way that gives you a great return. It is our job to create wealth ourselves. If I am not doing it when I am earning money, and if I am not saving adequately, and not deploying the money in a product which can give me a good return, the mistake is ours. What's the purpose of studying? It doesn't make any sense. So we need to little more get financially literate so that our life is more secure. That is the purpose of these kind of. I also find people invest in gold, they invest in real estate, they also invest in equity market. But they have different yardsticks to measure the different asset classes. Somebody invests in real estate 50 lakhs and he doesn't care about 20 years or 30 years. He thinks it is for long term and the money will, go up by 5 times or 3 times over a period of 20 years. Gold, he keeps it in the locker, he thinks it will only appreciate. But when it comes to equity, he starts seeing the next day morning CNBC, opening up Economic Times, and then discuss with the friends. And the friend will have some opinion on the product, on the shares and the mutual fund. And he goes and sells the product. Because it is easily transferable, negotiable, so he does it. So the mistake lies in not treating the asset class equally. So let us be very clear, the time with the asset is very important for you to create returns. If you are ready to invest for 10 years and 15 years, the amount of money you will get back in equity is far higher than gold or real estate. I can tell you that much. At 15% compounding for 30 years or 25 years, it is tremendous. So all you need to do is to put some money on a regular basis, 15,000 rupees a month in an equity product at 15 years and 15% return, you will have good money. That is what one should create. Somebody is asking me whether you can make 1 crore or 2 crores. Yes, why 1 crore? 1 crore is possible in 15 years itself, 15,000, 15% and 15 years. You will have 1 crore, but you should aim for 100 crores, I said. You have to extend the time duration, that's all. 100 crores will be with you, the same pattern. You need not do anything, great job. 100 crore is possible provided you are disciplined and invest. But we are missing the game completely. We need to look at long term when we are looking at equity market. We must have tremendous patience, like a test cricket player. Of course, today test player and T20 player is the same. So I am unable to understand the difference and the power of compounding. These 3 things will make you very knowledgeable and will make you the desired return. So these 3 are very important concepts. So don't be in a hurry to create wealth. Don't think that you can make money in a short term. Look at long term. Look at patience and power of compounding. India, as I said, is a great country. The median of the population, median age is only 28 years. China is already 39 years. And Europe more than 50 years, 49 years. And Japan must be 60 years. So we are in a great sweet spot. Only African countries can match this age. So we are going to grow irrespective of what happens, whatever paper can write, but we are going to grow. So we are in the right time, at the right place. Only thing, we have to have a conviction that investing has to be done now. It cannot be delayed beyond this. But if you are not going to invest, you will only be looking at others. These are all interesting numbers. You can read it yourself. The Aadhaar card population, internet users, we are going from step to step. Social media users. The food delivery platform is going to grow in a rapid way. Let us understand this. People thought that Swiggy and all that will not make any major difference, but it is going to make a very big difference. The next 5 years it will compound rapidly. People will depend only on them for everything and anything. Next 5 years the growth of the food industry is going to be tremendous. So we need to look at how things are, and stock market users are about 8 crores and mutual funds little less. That's why I said these two are putting together 11.5 crores and crypto is about 13 crores. People are putting money there. So people have money, but only thing they deployed in a way they think is good for them. We don't know whether right or wrong. Today the domestic investors like mutual funds, you must be all participating in a systematic investment plan. Today collection is about 26,000 crore today, 26,000 crore. Month on month we are getting it. That means we are talking of 3 lakh crore. Now if 3 lakh crore is collected year on year, then on top of it, your insurance money and EFPO and so much of money coming in, 6-7 lakhs. Even if I sell 1 lakh or 2 lakhs, nothing much is going to happen. You may sell 1 lakh crore, assuming they do this, still you are better off. So nothing much to fear about, but the amount of 26,000 speaks volume. Same thing happened in USA in 1980 to 2000. They started the same concept of systematic investment plan. They call it as dollar cost averaging. And everybody was contributing towards equity. Today 99% of the people are investing in the equity market in USA. That's why it's an advanced country, developed nation, and people are familiar with the equity market. So it's a matter of time. India will also come to that. Maybe another 20 years it will take from here. But we will definitely take advantage of this. So systematic investment plan, we started in the year 2017 or 18 in a big way. Now it is 26,000 crore. Maybe it will go to 50,000 or 1 lakh crore in 10-15 years time. That time you can imagine how the market will blow up. So get ready, understand this, visualize how things are going to change. And are we participating in the market in a regular way? That's a question one should ask. And if you're going to miss the bus, then whom to blame for that? Warren Buffett is a well-known investor in USA. He's about 92 years old. He started investing at the age of 14. Today he's of course 92, even now he invests in equity only. He owns only one house, drives his own car, maybe 5th or 6th richest person in the world. But he made big money after he became 50 years of age, not at 14 or 15 years. He says one has to invest and forget it. You should not look at it on a regular basis. But one has to invest in a proper share or fund. You can't invest somewhere and then say, I'll forget it. When I was going through the 2024 calendar year, how the returns have happened, I find that in a mutual fund, mid-caps have delivered a decent return of 25-26%. Small cap was almost in the same leg. Silver, gold, large cap, GSEC, all these things. And FD, of course, 6.8, and real estate has delivered 2.7. So I was going through the last 10 years average. I thought 1 year is too short a period, so I went into last 10 years. 10 years is also not much of a difference, except mid-cap has really done well. Gold has given me 11%, GSEC has given me 8%, and FD continues to give me 6.5%, which we like more. Of course, real estate and FD is in the very bad shape. So why I'm showing you all this is, we must have pie in all the 4 asset classes which I told you, but we need to pick up something which can give me little higher returns. That's the purpose of these kind of slides. If you're going to miss it out, then you are mistaken for that. Is the per capita income in India, is it going up or coming down? This is a question, people raise everywhere. 2003, our per capita income was $544. Today in 2023, it is 2485. It has grown up by 5 times. Do you think it's going to stay as it is in 2030? It will only grow. Whenever the GDP grows, per capita income grows, GDP grows, and Sensex will automatically grow. From 5,000 in 2003, the Sensex has grown to 66,000, 13 times, when the per capita income has grown up by 5 times. So if 2,485 becomes 5,000, imagine where we will be standing and how the GDP will function. So these are all the things which I am just showing you how things can change, instead of doubting the market, instead of doubting whether the market will crash, whether we think that what we are doing is right or wrong. Nothing wrong in that, but in my opinion, we are in the right track, and per capita income is definitely on the rise, and obviously you'll have the Sensex also going up rapidly. Systematic investment plan, which I told you, 26,000 crore today, is one of the easiest way to start your investment for a boy or a girl or anybody for that matter. At least I tell the people who join the company, put at least 30% of your income into SIP. If you are earning 1 lakh, put 30,000 rupees as your SIP in a good product. Then as you grow older, make it 25% or 20%, doesn't matter. But beyond 15%, don't bring it down. Continue with that till you retire. Your retirement corpus, getting out of this equity, will be far higher than your PF or gratuity or leave encashment. Why should you depend on that? Create your own pension. That is how one should invest money in the market. So SWP stands for your systematic withdrawal plan. It's a very, very good product for a pensioner, for a person who is retiring, who's got a good corpus out of SIP. Suppose I have about 10 lakhs of rupees. I want to live with a pension. 6,000 rupees on a month to month I can get out of SWP from my 10 lakhs. Every month I'll get on first, like a pension. I just said 10 lakhs and 6,000 or 1 crore and 60,000 rupees. It's possible. And it is very tax efficient for the simple reason it is taxed at long-term capital gains if it is held for more than 12 months. So pay 12.5% instead of your normal interest tax of about 30% if your slab is that. So take advantage of these kind of situation. You can inform your clients that you must do it. A lot of questions come whether if you are applying SWP for 1 crore, drawing 60,000 a month, whether the capital will be eroded. This is a question generally people ask. If you're going to keep the money for 10 years, draw 60,000 a month or 7,20,000 a year. 10 years you'll be drawing 72 lakhs from 1 crore. By the end of 10th year, if I look at it, my corpus will be 1.4 crores after drawing 72 lakhs, because my accumulation in the fund is 12 to 14%. But we are missing out because we try to take it out after second year, somebody takes out in the third year, then they say we have not got a good experience in SWP. Your experience will not be good if you are going to keep it for 5 years and less. It has to be 10 years or 8 years or 11 years. You are ready to put your money in PPO for 15 years. You are ready to put your money for 6 years in post office. But you are not ready in SWP for more than 1 year or 2 years. It will not work. So certain principles we have to follow. Right or wrong, it has to be followed. If you do that, SWP is one of the greatest features. A lot of questions come about whether the companies in 1996 and 2024 are saved in the Nifty composition in National Stock Exchange. It is not same. The index committee keep on reviewing, remove some companies, put in some companies, good companies are brought in to index, liquidity, market capitalization, all these things are taken into account. So definitely a lot of changes. You see Reliance Infrastructure, Reliance Capital, all those things have gone from the index completely. FII investors maximum are from USA. Of course other countries also contribute, but maximum 42% come from US. So foreigners will continue to bring in money to India. I don't have any doubt about foreigners coming to India. They will definitely bring in. The gross income of individuals having more than 10 lakhs is only on the rise. That you must be seeing yourself when you are filing the returns of your clients. I'm sure you must have seen the income has gone up. The standard of living of the people have gone up. So this speaks. This will only double in another 5 years' time. Indian stock market milestone is only on the rise. We have 5 trillion market cap on 21st May 2024. It will only keep going up. So you need not worry about the market. You don't have to worry about the market. What we have to worry is, are we putting our money, are we putting our saving into equity market? Are we buying the right product? Are we looking at long term? These are the questions which has to come to your mind rather than worrying about the war in Ukraine or Trump, what he's going to do. We don't care what he does. But whatever he does, the market is on the up move because the companies are performing. As long as the revenue, top line and the bottom line keeps growing, the company shares will keep growing. No need to worry at all about it. So we need not unduly worry about things which are not in your control, but worry about things which are in your control. Why investors invest in India? Because of the economic growth which I told you, diverse economy, large and young population, favorable policies, competitive labor price, positive demographics which I explained to you, that age group is very good. These are all the common mistakes people do regularly, investing without a goal, just in a random way. You invest some money, 50,000, 1 lakh, buy 100 shares of this and that, and have 100 folios of mutual fund, not having emergency fund, no budget, no retirement plan, borrowing money, personal loans are abundantly available. Every alternate call is regarding personal loans. They think that they'll keep on knocking you, and we think it's a privilege to get a call and obliging them by taking a loan and paying 36% interest on credit cards, not taking professional help. It has to be done in a professional, like an auditor, lawyer, accountant. You need to have somebody to handhold the financial advisory role. You can't do it yourself. Note insurance, yes. What is required, you do it. Taking the trading route, daily trading in share market. 99% of the people are losers, and futures and option last year, SEBI's report says 1.74 lakh crore has been lost by retail investors. They think they are making money. There every day they go and lose money. investing in unregulated scheme, in a Ponzi scheme, in a jewelry scheme, this, that and all that. We need to overvaluation, counter it. Can we avoid equity? We can't do, but we can always look at hybrid funds, balance advantage, equity saving, multi-asset, capital protection, effective SIP, STP. All these are possible, but then there are 44 funds here, mutual fund houses in India. There are about 4,000 schemes. How will you go and pick up the correct scheme? That's why I said you need to have a professional help, which needs to be taken without any doubts, and work with them on a trust basis. You must have trust. Select a correct person and then work for it. Then you will be able to, he or she will be able to help you. Equity stocks, mutual fund and PMS are the three categories with which you can invest. PMS, I will think the portfolio management, if you are earning 5 crores plus, you can look at PMS, otherwise don't look at it. Mutual fund is a great option for you, for a small investor to begin with, whether it is systematic investment plan or lump sum money. Both are good. Equity stocks, if you are knowledgeable, if you have the time, if you know how to do research, then it is fine. Otherwise, don't get into this. I'm just going through some of the fund performance compared to the last 10 years. Large cap fund, 345 rupees NAV has become 1097. It has grown 3 times in a matter of 10 years. Large and mid cap has grown 4 times, mid cap has grown 5 times, and small cap has grown 7 times. All these things why I am showing is you are not eroding any capital. Even if you had put some money there, you would have grown 3 times, 4 times and 5 times. Why we are missing out opportunity? Do you think it is going to come down in the next 10 years? Unlikely. So take advantage of these kind of schemes and invest properly so that you don't quit. A lot of questions come about how to create 50 lakh corpus. Very simple. You follow this 843 principle. First 8 years you put 30,000 rupees at 12%. You will have the first 50 lakhs. Then the next 4 years, same 30,000 you continue, another 50 lakhs. And then 15th year you will have 1.5 crores. Same 30,000 is what you are putting. And by the time you reach 20 years, you will add 50 lakhs every year. That's the beauty of this. 30,000 is what you are contributing. This is what you should do. People can say, you are ready to pay 40,000 EMI, but you are not ready to put 30,000 here. That's the problem with us. We don't want to do that. It's a very sad story in Chennai because we buy land here, there, and then flood is coming, government is not helping. Nobody will help you. Why should anybody help you? We have to help ourselves. Why should anybody help you? You have not done your job properly. So we have to blame ourselves. I won't blame anybody else. Then you'll have water, you'll have flood, you'll have drought, everything will be there. We have to face it. So please prepare yourself. That's what I am trying to say. It's possible when you are earning money, when we are qualified people, why not save money in a proper instrument without hesitation? That's the purpose. SIP can be 10,000 or 20,000 or 30,000. You can make 1 crore, 2 crores, I say 100 crores also, you can make it. Your determination to make 100 crore should be in your mind now. 100 crore is easy to make. And if you don't know how to make it, then we are mistaken. But 10 or 20,000 if you don't put it and in a professional job, then we are making a mistake again. Sensex has grown from 5,000 to 80,000 or 78,000. There also Nifty has grown. Do you think the 78,000 will go back to 5,000 at any point of time? We are calling ourselves a risky market. Why should we call it as a risky market? It will never be risky. We are taking a risk by not investing in the equity market. Market is always safer. It has delivered 16%. But we are not taking advantage of that. But do you know where the market will go in the next 5 years, 3 years, 2 years? We don't know. But market, in my opinion, will only going up. So from the past record, it tells me that it can double from here in another 5-6 years time. When it will do, I don't know. But definitely we are in the right wicket. Small and steady, can there be any problem? Money flow is quite high. So definitely you need not worry about it. SIP is the right answer. Crorepati, you can always big 15 years, every month you keep putting it. So corpus becomes 20,000 become 1 crore in 15 years time. You are taking bigger risk by not investing in equity, which I have been telling you repeatedly. Don't do the mistake. This is a good slide for you to know whether the market will be up or down tomorrow. Those who have knowledge don't predict, and those who predict don't have knowledge. So don't ask me whether the market will go up or down. So I finally concluding, avoid the bias and goal-based investing, have asset allocation, herd behavior, please avoid it. Do not act on rumor or tips, and seek the financial advisor. Attend the investor awareness meetings like this on a regular basis. And I can tell you one thing, that you'll only be benefited by all this. Thank you very much for your time, and I really enjoyed talking to all of you. Thank you. If you have any question, you can ask me. Any question you have, you can ask me, I can answer. Anybody has got any question or anything? No? Yes, sir.
So you said the 800 tons gold is important. That is one of the reasons we have the inflation.
No.
One of the reasons. So supposing we have an awareness program or something, because it is not they are going to consume or they are going to exhibit. You know that. But how do we come across that? Their import can be reduced so that inflation can...
See, that's the purpose of bringing the sovereign gold bond by P. Chidambaram when he was the finance minister. He could not control any of those things. He said, I have appealed to many people to reduce consumption of gold. He said, nobody is agreeing. So he thought sovereign gold bond is an answer. That's how the sovereign gold bond issued by Government of India and RBI came with 2.5% assured interest rate every month, and 8 years after that you will get back your money, and there is no long-term capital gain tax also for that. But what happened, unfortunately, in the last 1 year the run-up was so huge, the government has to shut down that scheme, and only the trust and temple trust and all those people have invested. Individual investors are not putting money for two reasons. One, the gold money is more or less is cash money which is going into the system, and the sovereign gold bond you need to have bank account properly. So difficult to control gold, but I think over a period of time maybe it will come down. I don't know myself, but unfortunately gold import is one of the highest component. There are only 4 good components which are consuming our foreign currency. One is gold, second is crude, third is your electronic imports, and fourth is your children education money which we are sending abroad for educating our children in foreign universities. Without knowing whether university is good or bad, we borrow money and precious foreign currency is spent. If you go to Canada, UK, USA, it's okay for a good colleges, good universities, that's fine, but top 1, 2, 3, 4, 5 universities are fine, but if you're going to study there in the 18th university or 19th university, better to study in India itself. We have got a beautiful...
Why they stopped the gold?
Which one, sir?
Bonds, sir. Why they stopped this?
I told you, the gold bond doesn't have a backing of gold. The government doesn't have backing of gold. They thought the price will stabilize at some point when Chidambaram introduced. But now what happened? The gold price is going up. Suppose the price is going up, continuously go up. The redemption has started now. 8 years over. This is started in the year 2014 or 2013 or so. The first thing has already matured. So government has to pay the money and honor it, no? So from where they'll bring in the money? That means there is a difference in cost and the market price. So again, budget has to make provision there. So they felt they cannot take a chance. They may bring it back when the gold price stabilizes. Probably they may bring it back. But it's a listed bond. You may get something in the market, but it is a good scheme. But,
So the prediction of the rate is very high.
No, there is no prediction. Like I showed you, nobody knows what price is going to happen. Nothing will happen. If Trump comes, we don't know what will happen, whether it go up or not, come down or anything. I don't think prediction is there. But 10% of your overall portfolio, if you have gold in paper form, now sovereign gold bond is gone. There are only 3-4 methods you can invest paper gold. One is the regulated digital currency gold is available for you, or gold ETF is there with the broker, or gold mutual funds are possible. The last one is sovereign gold bond. The sovereign gold bond temporarily they stop. So buy gold ETF or gold mutual fund. That is a good way of investing money instead of buying physical gold. That's what I'm saying.
Sir, you have touched upon India in equity markets. What do you think investing in the US equity market as part of our portfolio, financial portfolio?
Yeah, very good, madam.
How
You-
much do you think can be?
What happens is, if you have exhausted investing in Indian market, if you are fully invested in the stocks and mutual funds in India, the next step is to diversify into other geographical nations in the world. But when we hardly have touched 4% or 5% in Indian market, the question doesn't arise. But some of the schemes in the mutual fund, they are already diversifying into US market, European market, Japanese market, and all that are there. So maybe that can be one of the reasons, one of the methods of doing it. Or some of the schemes dedicated to USA itself is available where you can invest money through mutual fund. It's possible. That's one good way of doing it. Some small portion of SIP, instead of putting all the 50,000 here, can put 5,000 into US funds. That may be good. But only thing you must remember, the liquidity, it will take 5 days. If you're going to redeem here, it will come back in 2 days. In USA and all that, it will be T+5 or T+6. So it may be delayed. Second, the taxation will be debt taxation there completely. It is not equity taxation when you invest in international funds. So one has to keep aware of this. Otherwise, it's good method. You should look at those things.
So if say we have already invested about 10% in Indian equity of our portfolio, total portfolio, how much do you think we can go into for US equity?
No, your objective of investing in the US market is because you feel that US market will do much better than India? Is that the reason you're asking?
Just a way of protecting this thing, the financial this thing, plus the exchange conversion. Goal.
See, exchange conversion, if you're going to bring in money from USA and investing in India, like FII, then yes, that protection is little bit required there. Then 5-10% again you can look at Indian market. NRIs can invest in these kind of funds, in US funds, 10% or 15%. But Indian market is bound to do well in the next 10-15 years, delivering a much higher rate of return. In my opinion, I think little bit of diversification is good enough. I don't think we should overdo these things. And at some stage, I think this currency also will stabilize. Our currency has not fallen really much. 2.5% only it has fallen compared to many other countries in the world. We have done very well. I think we will get FI and FDI. Again, the money market may keep it. 2 to 3% every year you lose. That's all, not more than that. Any other questions, please?
Sir, I have one question, sir. I actually practically see it in my office. I find that especially the young chartered accountants and young artisans, these people are overspending. Their disposable income or whatever they get in their hands is going down day by day. If the consumption is going to increase, they generally feel that where is the question of savings coming in? How do I address this one particular side? Especially in 2029, if the FD rates are going to be in the range of 3% or 4%, they don't have any incentive or any sort of incentive to save also, sir.
Correct, you are right, perfectly correct, sir. See, what happens is saving should come by way of a habit at home. When you are young, you must know how to inculcate a habit of saving. It is a financial habit, in my opinion. Like your healthy habit, people say, they go to doctor and he says, you walk for 3 or 1 hour, 2 hours, eat good food. This financial habit has to come from home. Now, your job is to educate your assistants in the office. Whether they take it, don't take it, don't worry about it. Every day give 5 minutes of your lecture on them. Tell them that saving is a must. Bring them along next time when we have a program of this type, some awareness program. 20% of their money they have to save. That's all. If I am getting 30,000 rupees, they have to save 5 to 6,000 rupees. Balance, let them spend. Let them think 30 minus 6, 24 is only their salary. Let them spend the 24,000. It is income minus saving. then only balance available for them to spend. It is not that income minus expenditure we have a saving. It is income minus saving. This is how I have done it, and I'm largely benefited by that in the last 30 years. I think you should tell them by example what all things you can do. I can't go to the mall and buy whatever things are available in the whatever I see. What is required you have to buy. You have to have a budget. So all these things are important, sir. I think in your office you should inculcate a good habit. You must teach them good things and bring them along for investor awareness program like this on a month-on-month basis. I'm sure they'll change. And of course their salary level will go up. You have to give them more salary to make them. Yes, sir. Anything else? It's a habit only, nothing else possible, sir, here. Youngsters, not only your office, everywhere there is the same problem. Youngsters are not ready to listen. That's why we are not finding many youngsters here. Difficult to bring them for these kind of meetings, but it is our duty to educate them, create an awareness, and make sure that these things can be done only by means of, we are not doing anything wrong by telling the same thing again and again. I'm sure they will listen to us one day or other. They will remember at least the mistake. If you see the IT people, they get salary, good salary, they overspend, they want to become rich quickly. So they get into a lot of habits, they do trading, they try to do a lot of gimmicks to make sure that they become successful. They buy a two-wheeler at EMI, they try to buy a house by keeping EMI, they spend a lot of money, and finally when they take a personal loan, and when they are not able to meet both the ends, they finally go to the extent of committing suicide. We are seeing in the newspaper regularly. So these are all habits only, so one has to be very, very careful, and I'm sure you will be able to rectify their things. We have to bring in a chapter in CA intermediate examination about financial literacy. Yes. I think that will help, I think, a lot, more than anything else. But I think as an auditor, we have to inculcate this to your clients as well. Tell them that FD alone is not good enough to safeguard our wealth. FD is good, but it's not good enough. That's what I'm trying to say. I'm saying FD is good, but it is not good enough for my living. But if you're going to keep everything in FD, then we are in trouble, real trouble. I'm seeing a lot of doctors come to me and say, a lot of money is in FD. But we are trying to convert a little bit here and there. But definitely, there are avenues available which are a little more safer, but at the same time, ability to get better returns. That's what I'm saying, in a very simple way. If you are able to get 10-12%, why not take advantage of that? Any other questions, sir? You are all investing money regularly?
Yes.
Yes? You must be investing, I could see that. You are all investing, sir? No?
Yes.
You are investing in what? Equity or?
Land properties.
So
You
how
feel-
about this technical analysis helps, sir? Technical, chart.
Don't get into this technical. It will ruin your life. Unless you are a full-time employee. There are only two charts. One is technical, or you can go for fundamental. Fundamental is based on checking the balance sheet, annual reports, auditor's report, studying of profit and loss account, ability to create, the profits. This is a fundamental thing. Then I arrive at Hindustan Lever or Godrej Consumer as a good company. Buy the share, Infosys. These are all fundamental. Technical chap, what he does, he goes by the chart movement on a time to time basis. He thinks that 1,000 rupees now, it may become 1,100 after 5 minutes or 10 minutes, he buys. Suppose it becomes 900, then he will put a stop loss and lose 100 rupees and get out for the day, he lose 10,000 rupees. So, unless you are a professional trader, We have no business to learn technical chart. I'll put it that way. But if you're going to be a technical person interested in day trading, then you should learn this trick. But 99% of the people who are doing trading are losers. You will lose money, you will lose your mental peace, you will lose your health, and you will lose your relationship also with the family. All the four is guaranteed. So why to learn this? Don't do that, sir. Yes, please. Something you said, this real estate, you are buying only real estate. Your real estate, building, land building.
I belong to Tanjore district, Kumbakonam.
Kumbakonam, okay. So you do it
We are agriculture.
farming. That's good. Any other questions, sir, before you wind up?
Any chance for ETF coming for the commodities in India? Because I can see it in US, but not in India.
Commodities are very large across the globe. In India, unfortunately, it has not come to that position. These are all part of the futures and option trading. Everybody thinks that futures and option is very easy to trade, make money. That's how the share market, people lost 1.79 lakh crore last year. This commodity, what knowledge I have in crude trading or gold trading or silver trading, I don't have any knowledge. But people just buy crude, buy gold, think that it will go up or come down. Very dangerous. Good, it has not come to a great extent. But your commodities, mutual funds are there, which takes care of multi-asset funds are there. I think, in my opinion, they do a great job than getting into this gold ETF or these things. They're all good things. I think you should look at those options in a bigger way. If there are no other questions, we can wind up. So thank you very much for participating in today's awareness. Thanks.